Hey folks, welcome on back here to the Diagnostic Trading Hour. Let's check out where the markets are at. Right now we got the S&P is up 1.5, the Russell's up 6.8, the Nasdaq up 6.75. Dow's currently up 27 points, so it's, in summary, pretty quiet. I'm looking on over at copper. We got copper, it's down about 1%. We have gold down 0.5%. We got silver is currently running flat on the day. Natural gas is down about 0.5%. We got oil that's coming on up here. We got oil is down 1%, and with a dollar move, so some nice moves in oil and ags as well. We got corn down over 2% right now. Soybeans down 15 points. That's almost 1.5%. We got a pound dollar is currently down 43 pips. Euro dollar's down 25. Euro pound is up 3. The dollar CAD is currently up 57 pips. The dollar franc is up 31 pips. US yen is currently up 26 pips, with the pound yen being flat on the day. Euro yen up 9, and Aussie yen up 4. So like I said, we have had some nice moves on over here. Let's go ahead and check out. Let me get this out of the way. Go over here. We'll throw up at oil, see what it's doing right now. So decent little move there on oil. It's down at 1 deviation, 2 right there. Like, look at that, right to the level. Just bounced off of its expected move for the 1 o'clock hour. Starting to move on back up, and just watching it right now. There's not a whole lot happening, but anyway, so got that one. Let's go ahead. Let's check out gold. We got gold coming up, and who knows, maybe we can throw a trade on. Main goal today, though, finish up our homework for the upcoming FOMC. And let's see, gold did just fire off a spike striker, but it was end of hour, and so that one is done. Nothing yet. So pretty quiet, pretty low expectations on movement today. You can see not even quite hitting deviation levels at all, about 25% of a deviation level right now. And pretty quiet. Gold, I would expect to actually be quiet. There's a lot of demand on the options right now, so that is pushing deviation levels out. However, why would they be so wide if it's so quiet today? There's so much demand on the options right now because of upcoming FOMC and NFP. So it's going to push those deviations out a little bit wider than normal on a day like today. And let's see here, what else do we got? Moving on around, just trying to say that's really the main stuff. As far as other markets that are moving, we were looking at some of those earlier, and I guess let's check out corn and soybeans, see what they look like. Let's pull those up and scroll way on down here. There we go. Got our corn contracts. Load that one up. We'll look at soybeans, and I mean, corn's the biggest mover of the day today, so it's a very nice move. But you can see it's on down. Look at that. I mean, just you don't get a prettier trend. And it just popped right off. I mean, it's just like right near 3 deviations on the day. Let's see. It's just a massive move. Ooh, I don't even know. Is that an error? So that was a massive spike right there. Let that reload our data. Let's see. Here's a tip for you. I always have 2 charting platforms open. I never have just one platform. Why? Because when I see something really weird, like an 8-point pop happen, okay? And just right in front of my eyes, just boom. And now that could be a news-related event. Maybe I know about it. Maybe I don't know about it, okay? But when I see something happen, I want to have another place I can go through and look at and verify market movement. And I mean, you'd be surprised how many little things that, all of a sudden you realize, wow, that's an error, or that's an issue with the platform, or whatever. There could be all sorts of different issues. And so I'm looking at this one right here, and I'm like, well, the market really wasn't down at that price today. So on the ZC, let's see, what do we got, a Z12? So let me bring up right here, Thinkorswim, okay? And looking at that, I'm really not seeing that data line up. And so that obviously raises a red flag for me if I see some sort of big, massive spike. And it did drop down quite a bit. And I am on the December future, so I'm going to have to like dig into that. But that, obviously, I don't see that movement at all happening over here. And even if I, narrow on down to like 1 minute charts on here on corn, and I'm seeing the current price is lining up perfectly, but I'm not seeing that low. So the tip for you is, if you see something weird, you need to have another charting platform already open and ready so you can go and look at it. It doesn't mean that you have all your indicators on it. I use another charting platform primarily. I use another charting platform just for verification of price action. Maybe you don't have a data feed connected. You haven't even paid attention. So I like to have all my main instruments up. And, like Thinkorswim is one of my preferred alternate platforms. They're awesome. You can go on there. You can open an account up. And just for getting an alternate one. Now, I'm not saying my primary one. Notice I said Thinkorswim is my alternate. Okay? Now, other platforms that I like using for trading, if I'm doing like future seasonal spreads, I'm trading eSignal. If I'm just doing outright futures, NinjaTrader, maybe eSignal on that, just outrights, but there's some things I can do in Ninja that I like for outright futures. There's some things I can do in eSignal I like for seasonal spreads on futures. For options, I'll use Thinkorswim. So it's really like, what is the edge that platform's giving me? And so I go over here, we'll get soybeans. See, soybeans, that's lining up. That makes sense. If I put this over on a 5-minute chart, we can shrink it down a little bit. There we go. Then we'll just zoom in on the current day. And chart's pretty much lining up. Okay, so right there, price is lining up. Everything looks normal. Just something is up over there on that corn contract. I'm not sure what it is. I'll definitely dig into it and figure it out. But it may be something to do with roll or how roll's planned in to the contract. I just know corn is really, it's been really weird because of the dates have been, the prices have been so different on historical dates. And there's been some massive gaps, and that's caused all sorts of weird tick issues. And so in NinjaTrader, let me show you something you can do. You can go over here, you can go to Tools, you can go to Instrument Manager. I'm going to pull up corn, and I'm sure I've made some edits on this because I'm usually editing some of the contracts to make them line up on the rolls, how I want them to line up. And so once I look up the contract, like corn, and then I click on it, I click on Edit, right here. And then on the Miscellaneous tab, you scroll down to the bottom. And now you have all the contract months defined. Click on that. And now what you'll see is that we have all these different dates right here, and this actually becomes where our issue is. Okay, it's trying to roll over, but it says don't roll over till 8/25, and I have it set to merge back adjusted data. So how do I fix this problem? Because we got 7, well, that one was corrected. We got 9, that one's corrected. How do I know it's already corrected? See, check this out. This is where you'll see it. Notice how it says that there's a date which is in the past. Okay, notice how it has an offset, meaning there's basically 5.5 points difference between the September and the July contract on 6/24. Okay, therefore what that tells me is that was the difference, and it won't update it again until December on August 25th. The problem is I'm on December corn right now, and their roll date doesn't match the reality of the market. So how do I fix this? Well, what I'm going to do is I'm going to go in to cmegroup.com. And now we're going to find the ag markets over here. So agriculture. Now we'll go down, we'll find corn. There we go, first one on the list. Now I'm going to find settlements. Okay, these are settlements for yesterday, which is perfect. So now I'm going to go up here, and I'm going to change this to roll on 7/28. Does it really matter? No. Okay? It just matters that it's in the past and that I get the difference. And to me, the easiest way to do it is to base it on settlement, on the official settlement difference. So that's why I'm not worried about rolling it on the exact week that corn volume rolled over and went to December, and I'm not really that worried about it. And, I mean, you can see the volume right there is 62 versus 84,000. Okay? So there's still quite a bit of volume in the September contract, but I want to move it over now because everybody else has rolled over to December. So let's check this out. Well, there is 0 difference Okay, 376.6, 376.6. Actually, that's right spot on. There was in previous days, but actually yesterday they settled at the exact same price on September versus December. So we'll click OK on that. Then we'll click OK right there. So all we'll do is just update the date. And then we'll click OK right here. Then let's make sure we got... Yep, we're on it. So there we go. Well, now if I search that and go to this, notice how it's going to show me December. It had September down there. Now it has December as the automatic expiration date because I've told NinjaTrader to roll on that date. Now, if there would have been a different price, if it would have been 5 points higher right here or 5 points lower on this, where the two settlements were different, then I would have added 5 or subtracted 5 or, whatever. I would have made the difference in there. But there was no difference. So click OK on that. Right over here. Once that's all built in, now I'm going to close that chart out. I'm actually going to close down my Ninja. And then I'm going to clear out the cache folder. There's a couple ways to do that. One of them, the manual method, okay, is just to go in and go over here to, we're going to go to what? It's going to be under Documents, and then it's going to be under NinjaTrader, and then we'll go into the bin, and then we'll go into, oh no, not the bin. We'll go into Database, and you'll see a cache folder. Okay? So I can just literally delete that data out. Now if I hit Shift Delete, it'll actually delete it out of my recycle bin, so I won't be storing it. I should have done Shift Delete. Do it. So that's the folder I want to delete right there, is right there. Now I can also get rid of all these if I want to. And to do that, just hit Shift Delete. It'll get rid of all that information. And now when I open my charts up, I'll have clean data. So that's one of the methods. The other one is like using the toolkit. You can just click on the cache removal button and the tools. All right, we'll be back right after this break. All right, folks, we're coming back here to the Diagnostic Trading Hour. Okay, so anyways, just wanted to give you that verification ability and give you that tip. I mean, a lot of traders, especially when they're new, they come in, or when they're experienced, they get so used to one platform. And again, I'm not saying that you need to manage all of your trades out of multiple platforms. Now, I will manage trades on multiple platforms for various reasons if they give me an edge. So I guess if I often trade Thinkorswim, I'll use that for options. I'll use, when I'm doing future spreading, I'll do that on eSignal because I can actually go in and chart the different spreads. Buy this month, sell that month, and it'll give me true intraday open, high, low, close bars. Everything else just gives you like the high of one minus the high of the other, which is a false bar. It's not where the price actually traded at during that day on the spread. So I'll use eSignal for that. I'll use Ninja for my futures, Forex, stock. It's just easy and it ties into a lot of different brokers. So, there's a lot of different reasons to use different platforms. But no matter what your reasons are, even if you're like, this is all I trade, I don't need more than one platform. I totally agree with you. You don't need more than one platform to trade. But you do want more than one platform just to validate your data. Okay? If for no other reason, just to validate the data. Let's see. Let's pull back up corn now and see what happens if we can. And that doesn't load up exactly how I want it to. We're just going to move on because I want to get into the FOMC stuff. So we have our plan complete and up and running for tomorrow. And let's see here. Okay, so corn up. Throw that on 5 minutes. And I'll just use my normal spike striker template. Okay. Let's see if it fixed that data issue. If not, then I'll look into it and figure it out later. But I did not see that data discrepancy. There we go. See, that's clean. I didn't have that weird drop down. So by seeing that big move, that big bar right there, that let me know something was up. Okay? And I was able to validate. I'm like, man, did corn just take off? Was that a massive move? Or, what was that? And I look at it and I'm like, well, it's still a big move. It's still a 1.5 deviation move, but I mean, it didn't drop down to 750 something. And I could see that by having a second platform up. And then I'm like, okay, so I need to clear my cash out. I need to make sure my rollover dates are lining up and get it on, December now. And so, again, the steps I went to Tools, Instrument Manager. I found the instrument. I clicked on Edit in the second tab. And then I scrolled down, clicked on the months, and then went up to the December. And I'm like, oh, let's go ahead and have December roll yesterday. I hopped on CME. I saw if there's any difference in settlement, and actually September and December had the exact same trading price, so it made it really simple. And just went in there and aligned the prices to be basically at zero, but roll yesterday, and that cleaned up my entire chart. But I also went ahead and cleared my cache and cookies just to make sure everything was all cleared out. And now I have a nice, clean, pretty little corn chart. But again, all that came back to being able to look at and see what was happening on a different platform, because if you don't see something else, you don't know. You don't know that it's off. You don't know why it's off. You don't have any idea. As far as you're concerned, it's just right, because the chart that's the price. So I always suggest you have a different platform just to validate your charts. And I do this no matter what platform I use, because you never know what kind of data feed can be coming through, what kind of error can be happening. If you're not in a room with other traders where they're sharing charts, I mean, you need to be able to validate charts. And I like to validate it myself on my own computer. And if I see two discrepancies and I don't know which one's right, then I'm going to go over and ask some of the traders, or maybe look online for just some delayed data quotes and see what it looks like. Okay, pardon me. All right, so back on track over here. Let's go ahead and let's dive in to tomorrow and talk about what's coming on up. So really nothing happened today, just a quiet day. I mean, we got consumer confidence, not a big report that we put a lot of focus on, obviously. But anyway, so we have the consumer confidence report come out today. And let's see, what do we have over here? Let me pull up what I've already done with you on the news plan so I don't have to repeat a bunch of stuff. But really just the plan that we put out, let's see, yesterday on consumer confidence, I said trade the euro dollar. So we're going to look at it right now. And I mean, it's just been quiet all day, so it's, nice. But we'll pull up euro dollar here. We'll review that trade, and then we're going to dive into tomorrow when we get back. So stay right there. All right, folks, come on back here to the Diagnostic Trading Hour. And just check it out where everything's at right now and looking at it all. And what I can see in here, and now what it will do is interesting. It actually auto self-corrected. So even though the settlement was there to make the roll accurately happen, remember I said I thought it was zero? Well, I went into it, and it actually did correct it by like 9 ticks. And that's why I got rid of those 9-point discrepancy there, and it took care of it. So by closing it down and clearing out my cache, it was able to auto-correct. And I actually just put a 0 in there. And I just let it take care of itself by using a previous date. And then Ninja was able to go, hey, here's the difference that we need to make sure everything rolls like it should. So that's pretty cool. I didn't know it would auto-fill that number in for me. And I'll have to use it in the future because I thought I always had to manually calculate it. So I learned something new today as well. And I'll have to try that out again in the future as different things arise. But hopefully that helps you know, okay, when you see a discrepancy, what can you do? How can you know there is one? What is an alternate, means to figuring that out? And with that being said, now let's spend the remaining part of the hour. We got a good amount of time here, and we can still go in and analyze the different currency pairs and what we can do with them to potentially do some trades for tomorrow, because there's a lot of potential trades for tomorrow, and we want to be ready. Okay. So let me close all this stuff down that I've been messing with inside Ninja. Let's get on over to our news. Pull up tomorrow. We got ADP, NFP. We already talked about that plan. Let me catch you up on that so you have that one if you haven't written it down. We got an 8 to 10, and it's basically taking advantage of the NFP and the GDP. We're looking for about a 30 pip profit. It may pop up 40 or 50. It usually comes back down inside that range because Fed funds rates coming out. So we expect a little volatility in the morning. We expect implied volatility to be a little higher. having the ADP NFP, not the major NFP, but the ADP NFP, and having the US GDP should cause some volatility on it. So we want a minimum of $30 in profit on the trade. It pops, it comes back, goes flat, going into, basically getting ready for the upcoming FOMC. So that is one potential trade in the morning. Then we have the crude oil inventories. And I spent a lot of time yesterday. I was going through this with a bunch of traders, and we were talking about different ways to do it. And the main thing I was focusing on over here was I was focusing on really just using Spike Striker over and over and over again. And we went through and we analyzed every single report over the last few months, and the Spike Striker did fantastic. Things that we learned are obviously, the main thing was really just if the market had retraced half before we got a signal, then we only didn't in the money. We didn't do an out of the money because we don't expect it to keep going if it retraced half of the movement off the news announcement. And the other thing we learned was only go for the aggressive entries. I mean, the conservative entries, because the aggressive entries were losing. Meaning trying to hop in the trade early before the market had broke out of the higher low. And let's see, what was the third thing we're going into? So we had the only do in the monies, in the monies when it's retraced half. That was pretty much it. It was actually pretty simple, but we saw it worked over and over and over again. If there was no trade, don't force the trade. We talked about making sure to check the bid and offer spread. And then make sure that you're buying, getting out will get $3 higher than that. So if the bid offer spread is $5, make sure that you're, if you bought, you're going to get out, like say at 92. So like $5 bid offer spread plus $3 to make it simple, get out at 92. If you were selling and you're buying back to get out, buy out at 8 because all the volume drops off. There's no market makers quoting volume there. So that'll take care of the GDP, the NFP, the oil inventory. And now the last thing that we got coming up here is we're going to go into the news, and we want the news setup here. So we got 90 minutes before, and we're going to go into, 60 minutes before, and we're going to go into 30 minutes before on each one of these announcements. So on the 90 minutes before news announcement, what we're looking at over here is the U.S. FOMC and Fed funds rates being released at 2 o'clock. And we're looking to do Aussie dollar, okay? Basically, with a minimum profit of $25 on the Aussie dollar. Now, this is entering at 12:30 for the 2 o'clock expiration, okay? Now, on euro dollar, $35 is our minimum profit we want on that iron condor. On the pound dollar, $40 is what we're looking for, okay? On the dollar CAD, 30. On the dollar franc, 40, and on the dollar yen, 30. So we got 30 and 30. So we got two 30s, two 40s, and a 35. And I basically just put them in, I don't know if I had them alphabetical order is what I did a while back. Yeah, so they're just in alphabetical order. They're not really in order by amounts. But just to recap that with you, this is 90 minutes. This is entering at 12:30 for 2 o'clock. And this is if the trade is there. Okay, if it's not, we don't got to force it. And our big goal on the next trade is to be able to go in, on the next FOMC, is to go in and actually calculate the ones on the other 4 FX pairs. But again, that's $25 on Aussie dollar, $35 on euro dollar, $40 on pound dollar, $30 on dollar CAD, and $30 on dollar yen. If we go in and we look at the one that is 60 minutes before, okay, so this is getting in at 1 p.m. for the 2 o'clock expiration, buying the lower spread, selling the upper spread on Nadex. We're going to go in on the Aussie dollar, $20 minimum profit. Euro dollar, $30 minimum profit. Pound dollar, $35 minimum profit. Dollar CAD, $25 minimum profit. Dollar franc, $30 minimum profit. And dollar yen, $25 minimum profit. Now, if you're not getting all this, the cool thing is we got a replay, market replay, or not market replay, but a radio replay, channel 7 on TFNN later today. If you go to TFNN.com, you click on Tiger TV, click on Channel 7. You can watch the replay, the archive of this show, so you can, fast forward, rewind, and, get these replay numbers right here. And if we go into the 30 minutes on the hour, okay, so this is 30 minutes out, entering at 1:30 for the 2 o'clock expiration. Now, again, you're not going to be able to get all these. That's why we're listing off a ton of them, okay? If we can get a couple off, that's awesome. Aussie dollar, $20 minimum profit. Euro dollar, $25. Pound dollar, $30. Okay, dollar CAD, 20, dollar franc, 25, dollar yen, 20. Those are the amounts that we would like to get on the trade. That really is the high to low expected range on the trade leading up to it. So you could also look at flirting with some butterflies on these as well. But, and basically they need to be as wide as we're saying we want minimum profit on the iron condors. So that's going to be harder to pull off a 20-tick wide US yen than it is going to be able to pull off getting $10 on two sides. So, anyways, I want to run through those numbers. So that's literally like 18 iron condors in 90 minutes, okay, that you could potentially look at doing. And you may be able to add on. You may put on the one at 12.32, and you may do the same currency pair 6, and you may put on the same currency pair, at 1, and then the same currency pair at 1.30. So lots and lots and lots of trades lining up. Okay, now let's go into the section right here. We got the euro dollar, the pound dollar, and the dollar franc. Now this is, and it's interesting because you would think, hey, it's FOMC and the market's going to explode. And now remember, if you watched the show yesterday, if you didn't, you can watch the archive. But I walked through and talked about the movements when there was a press conference and when there was a detailed release where they went into economic projections. And we've seen that when the large move happens, normally, like almost every time, okay, what we've seen is that is when both there's economic projections and a press conference. Very rarely do we see a massive move when it's just a statement of the Fed funds rate. So, understanding that fact, we expect even less movement, but there's still usually going to be plenty of implied volatility. Okay? So the Fed funds rate is going to come out at 2 o'clock. So we're actually going to do a neutral play on this. Most traders are like, oh, FOMC, market's going to go crazy. I'm not talking about the market right now. I'm focusing just on the foreign exchange. Okay? And again, there's usually less of a reaction when there's not a press conference and there's not an economic projection release along with the Fed funds rate. So we're not having that tomorrow. We're just having the statement and the Fed funds rate, no economic projection, no press conference. So on that, looking at the euro dollar, we're looking at an entry as early as 11 and no later than 1 o'clock for ideally a minimum profit of $50 for the 3 o'clock expiration. Okay? On the pound dollar, we're looking for an entry of, as early as 11, no later than 1. Okay? For 3 o'clock expiration for $50, and the exact same thing for dollar franc. So all three of those, that's what we're looking at. Now, what about the other FX pairs? I want to go ahead and add those on. That was our goal today, is to try to see if we could squeeze those in now that we got that entire news plan laid out for you. Okay? And to see, is there anything else as well that we need to make sure you have on your list? We got building approvals. We're going to need to go into that as well. We got housing starts. We have GDP, jobless claims, and PPI. That's all. Okay, PPI we don't have to cover because that's tomorrow night. Okay, so we do have a few things left that we're going to have to go over. And so it's going to be a pretty quick show here going into the end. So let me get all my charts set up on the other end. I'm having it pull all the data right now for us so we can fly through this. And once that's going, then we'll be able to move pretty fast through these remaining reports. We only have a few that we got to do, and most of them are pretty easy. Gotta love the snap message over in over in Google Chrome, so whenever Flash crashes. Okay. And got one more. Okay, jobless claims we're not going to worry about. We do the same thing every week. We look at expected movements, we look at spike trackers. So basically the exact same report that we did last week on jobless claims, just repeat that. And if you didn't get it, let me see here. Okay, we'll add that to the inventory. But go ahead and just put spike tracker on jobless claims. Put spike tracker on oil inventory. So probably need to add that as a new category to your list. Same thing on natural gas. So we want to put that on all three of those, okay? And maybe if you can check out the webinar I did with Nadex on Monday, then that's where I went over the spike striker on oil inventory and everything else. Okay. So, going in and diving in, let's work backwards real quick because we already have at least 3 trades on FOMC. We don't have to have all of them at once. Let's add in our GDP first. So I'm going to actually sort of sounds funny. I'm going to hop forward to Thursday, and well, let's see here. We'll have a little bit of time tomorrow. Let me see what we got. June 30th. Let me see how quickly I can do this one. If it's going to be an easy one, we'll knock it out fast. And let's see, June 30th. Yeah, the CAD GDP. Okay, so looking over all of these reports right now, we want a entry at 8 o'clock, no later than 8:15, for a 10 a.m. expiration, for a minimum profit of $35. Okay, that's for Thursday, June. Okay, so July, whatever. That's going to be August 1st or whatever it's going to be. So we're going to be on 31st or 1st? 31st. So July 31st for the release there at 8:30 on the Canadian GDP. We want a $35 minimum take profit iron condor. Entering at 8 no later than 8:15 for a 10 a.m. expiration. Okay, so that makes that one easy. That one's out of the way. I'm just trying to get, because tomorrow I want to be a focus on just FOMC trades. Okay, so we got GDP out of the way. We got jobless claims. That one's simple. And let's see here. Pulling that up. And we got 5, 8, 30, 12, 12, 30, 1, 11, 15. One massive one, but that wasn't really off jobless claims. That was like back in May. So I'd probably be focusing on trying to see if I can pull a spike striker. That's probably about all I would do right now. So let's update that one to spike striker. Okay. Let's hop on over to let's see, what are we on right here? Housing starts for Thursday morning on the U.S. yen. Get this one out of the way, and that's going to happen at 1 a.m., which is really going to put us at like there's a few different ways we can play this. I'm just trying to figure out what the best way would be. For 7 a.m. on this, I'll have that one done as soon as we come back. Then we'll knock out building approvals, and then if we have time, we'll do a couple other currency pairs over on FOMC, because we got 3 down, so 3 to go. Share there, we'll be back right after this. So I'm back here to the Diagnostic Trading Hour right here on TFNN. All right, so what we're checking out right now, going through, and I had knocked out a couple trades for us so we can come back to FOMC. We got the U.S. yen report that's going to be coming out, and that's 11 p.m. Entry for the 7 a.m. expiration. Okay, it's in a 1 a.m. release. So we're entering at 11 p.m. for a 7 a.m. expiration with the report comes out at 1 a.m. and on July 31st. Okay, so tomorrow night is when this trade will happen. And we're looking for a 30 pip minimum profit on the iron condor, buying the lower spread, selling the upper spread. Okay, so that's the U.S. yen housing start trade. And then we got the Aussie dollar trading the building approvals report tomorrow night. You can enter as early as 6 for an 11 o'clock expiration, and you can go in for as little as $25 profit on the trade. Okay, so minimum profit on both sides combined, the lower spread and the upper spread of $25, and that ought to help you knock those out. Now we already got a euro dollar, we already got a pound dollar, we already got a dollar franc. So now let's go ahead and let's add in, what do we got, dollar yen that we want to check out. Okay, and so we'll see if we can add that one on. Usually I don't even get to these, so if we can get to even one of them, that'll be, adding another trade in our arsenal. We got what, dollar franc. We don't have dollar CAD, so we add dollar CAD in, and I'll pull that up. We'll see if we get it. If not, we'll have it ready for tomorrow, but I'll pull up the dollar CAD right here. And then let's see, we got euro dollar, pound dollar, and then Aussie dollar. So we'll pull up Aussie dollar, see what we can get on it. And pulling that one up as well. So it's probably more trades than you can handle anyway at one time. But it always gets you going. And, one of the things what I tell people is, especially, first couple times on FOMC, I mean, it honestly is wise just to demo trade it to get through because it goes fast. Okay? Anyways, let's check out dollar yen. And we're looking for 3 o'clock expirations. We got, if we're entering earlier in the morning, okay, so got to back on up there. And remember, our morning trade is entering as early as 11 and no later than 1, okay? And taking that on to pretty much like right there at 3 o'clock. We got 18 pips of movement, 9 pips of movement, 80 pips of movement. And that was on a big Fed funds release, okay? And then let's see here. 50, 80, yeah, we got some big moves. So I'm probably going to want to dive a little deeper into this one and line up the dates like we were talking about last time. And what I mean by lining up the dates is where I go in on Fed funds rates. I don't know how deep we'll get into adding these in because I don't want to just add them in just because we want more. I want to add them in because we got the right trades. But, so if I see the last report was pretty small, and on the last report, right here, we did have all the different announcements. We had the press conferences and everything else. The report before that was also very small. That was like today, the one that's coming up tomorrow. Really nothing happening, just a basic statement. The one before that, so now we're going every other. So once you get that pattern down, okay, so last one had everything small. Last one only had two of the 4 pieces small. One before that, we had the press conference economic projections big. It was like 80-something pips, okay? One before that, we only had a couple things. It was small. One before that, we had economic projections and press conference. It was like 120 pips. So one before that, we only had 2 things. It was like 45, so it was still pretty decent. Before that, we had both. It was 120. Before that, we only had 2. It was like 40. Before that, we had like 230. That was an insane day. All right, we'll dig into this one if we get to it tomorrow. And if not, we'll just keep adding these on as we go each time they make the release. All right, y'all stay tuned. We have another great show coming up for you right after this.